Another day, another big sell-off in the stock market. Today we're going to be talking about the stock indices, which are trading lower off of Meta's earnings, as well as this morning's PCE number, as well as GDP numbers. So much to talk about in this video. We'll also be taking a look at gold and whether or not this is the start of a stagflation event. And we'll also take a look at the dollar. Where's that going? It's all over the place too. And we've got some crazy stuff to get into. So let's jump in. Welcome back to the channel, guys. I just want to remind you as we get started, if you enjoy my content, hit that thumbs up button and subscribe to the channel. I look at the like button to see if this content is resonating with people. So if you like this style of content, hit the thumbs up button. It's the easiest free way to let me know that this was helpful to you in some ways. So the NASDAQ is down 0.83% here this morning, and it's, not showing any signs of stopping at this time. Now, I want to take a look at the daily chart because we mentioned this yesterday. We talked about the daily chart showing some concerning signals if we got a wick off the top and closed red. And that's exactly what happened. So yesterday, if we take a look at the technicals, again, we were in this upward trend. Buyers were buying every single dip until suddenly they were not. And we went sideways and broke out to the downside. Now, a lot of people, actually, I pointed out in yesterday's video, were pointing out in my live stream and in my video yesterday, I had people pointing out that they thought that this was overdone and that this was just one big con and that the market was just going to rip back to the highs. I also responded to that theory or that idea that I disagreed with it, because the reason that the market has sold off here recently has been a combination of geopolitical risk in the Middle East, yields rising, which has continued to be a theme that we'll talk about in today's video, and earnings and guidance from some of the big companies being under question. Well, we got some severe evidence of that yesterday. I think we can't really talk about indices unless we point out what happened yesterday with Meta. Meta is, of course, a massive US tech company. You know, whether you use WhatsApp or Instagram or Facebook, Meta has its hands in everywhere. And I think there's some crazy stat, like 40% of the world will use a Meta-related product every single day. So it's a huge, huge indicator of not just the US economy, but globally, what are people up to? So huge sell-off here. The best of my ability, the best knowledge that I have in terms of why this was so big was, kind of confusing at first, because you had actually pretty good earnings numbers. You had higher than expected earnings and revenue, but why did the stock sell off so much? There was some guidance that people didn't love, and at the same time, there was some potential investment in the virtual reality world, metaverse, right? Which the Wall Street hated last time. Mark Zuckerberg really took the company in that direction. And so a resurgence in that causes some fear in a time where people are really just insistent on profits and revenues got to go up. Take that, you can keep that metaverse stuff. We want profits and WhatsApp and all that. So the market sold off huge on Meta. You can see we're down 14.5% at the time of recording this, and with it went the NASDAQ. The NASDAQ sold off in after hours trading yesterday and is following through this morning on what was poor GDP numbers and some hot inflation. That combination, absolutely terrible for the stock market, and I'll show you that to you right now. So first we'll talk inflation. This morning we got some early reads on PCE. We had core personal consumption expenditures quarter over quarter, and it came out hot, 3.7% compared to the 3.4% expected. Now, hot inflation is not what the market wants right now. In fact, it's the exact opposite of what the market wants. The market hates this because inflation means higher for longer. Fed's not going to cut, and long duration assets, specifically like technology, which require lots of capital and investment for future returns and profits, is under pressure. You know what else is under pressure is the Russell, and I can't help but celebrate a little bit. I've shorted the Russell, and so even though I've had 2 failed attempts to short the Russell, one here and one here, this third entry seems like it's doing okay. I've got a stop loss on this trade. I plan on trailing that and taking the risk off of the table. If I update that, you guys will see it inside of the Discord channel if you're a VIP member. By the way, just a quick plug for the Discord. If you're not already in there, you can see all of the trades being taken by myself and my colleagues Frank and Ivan. enlivened. We share our trades, updates, analysis, and we have a chat room available. If you're not already in the Discord, there's information for that linked down below in the description. So the Russell is trading lower off of spiking yields. In fact, at the time of recording this, we are hitting an intraday high for 2024. And rising yields suggest that the bond market thinks that inflation is going to stay sticky, problematic, and rates are going to stay higher for longer. Higher for longer, not good for stocks. Like I said, especially the sensitive areas like the Russell, which is trading down 1.6, 1.4. It's all over the place this morning. Over 1% down on the day. Same thing with the NASDAQ, same thing with the Dow, and S&P is not too far behind. My point was showing you that the yields rising is dramatically not good for the stock market. So as you might imagine, these rising yields are strong for the dollar, and the dollar looks really attractive relative to its peers. Kiwi dollar, Euro dollar, pound dollar, Aussie dollar. The point is, you can see a lot of bearishness against the counters to the dollar and a lot of favoritism towards the dollar in the Edge Finder's scoring system. Now, this scoring system takes a look at things like the sentiment data, technical analysis, economic data, and it factors it all into its final score and bias for your favorite currency pairs, commodities, and indices. If you do not have a copy of the Edge Finder and you're a regular watcher of my channel and my videos and live streams, I just want to make a fair warning to you. Take a look at your hands right now. Yep, look at those hands. Is there an Edge Finder in those hands? No! If you answered no, take a good look. Is it there? If it's not there, this is your last chance for the entire year to get the lowest priced Edge Finder copy available. We are planning to raise prices and add new features, and it's a one-time purchase to get access to the Edge Finder. This is a sales pitch because I'm giving you a fair warning that this is going to be the last chance to get the best discount of the year. This 45% off is achievable simply by sending us a direct message using the first link in the description. So when you click that link, you can see just the chat now button. Click that and just type in or check this box, Edge Finder 45% off sale. What this will do is it will connect you with a representative on my staff who can answer questions about the software with you, make sure it's the right fit for you, and get you that discount for 45% off before it ends officially for several months. And again, our prices are going up, and that's a fair warning. So this really is your last call. Now, in terms of bullish setups on the indices, what we can see is SPX, NAS, and the German 30. Now that's a neutral. US 30, that's neutral. We're getting some very softly bullish readings on the S&P and NASDAQ. And while I actually think that this sell-off is pretty justified off of rates, I think there might be a buy the dip opportunity at some point, though technicals right now are not leaning into it. I've made this clear in my recent videos. I am bullish on the indices overall, but waiting for a technical opportunity to join constructively. Now, why am I bullish? Well, again, overall, I still think company earnings have the chance to continue to improve, continue to beat, and I think that at some point the Fed will be able to cut rates. I'm still a believer in that camp. I think right now you're seeing just some counter data to that, which is really scaring the markets. But again, we still have very low levels of unemployment, and if we take a moment here to go to the indices scanner, we can justify why the S&P is still getting a bullish reading by looking at some of the economic data. This strong economic data, when you point towards manufacturing PMIs, retail sales coming out strong, employment data being strong, retail sentiment is bearish against it, the COT data still looks strong, and seasonally it's a decent time to look for bullish setups. There's enough here for me to constructively take a buy position if and only if the technical setup arises. So I'm watching the indices close for that matter. Outside of indices, we'll talk quickly about gold and silver. I do have a position currently on silver that I'll talk about in just a moment, but we remain supported here. Now you might be wondering, Nick, if inflation data was really hot this morning, why is gold not way lower? Because you can actually see during the time that the data was reported, the gold market actually went up and then came down later. Why isn't it down massively off this data? Well, it's because it was coupled with something else. And that something else was, of course, the advanced GDP number, which came out lower than expected. Remember, lightening on the economic data side is usually good for gold, right? Because gold is something that oftentimes trades on uncertainty and fear. If the markets are seeing the economies around the world slowing, gold likes that. So gold is trading sort of up on this number and down on the inflation number. And where does that leave you? Well, inflation kind of takes the cake, so that's why we're trading lower, but there is some, weakening economic data mixed in that's perhaps offering some supportive buyers for gold as well. It's kind of a mixed picture, and that's why gold's not decisively up or down. That being said, if we continue to see a theme in which the inflation problem, right, remains elevated, but you also have growth, right, trending lower, this is the idea of stagflation, and it's part of the reason that we saw this gold market erupt already. We saw some light, economic data earlier this year, which really got gold excited. That coupled with inflation potentially coming down and rate cuts still in the picture, that was also bullish for gold. But if you do get this environment, this is a very bullish environment for gold, is inflation hot, growth cooling. So although I don't have any technical setups or entries or, outright bullishness or bearishness on gold right now, I would say that I slightly lean bullish, and I'm watching for the edge finder to give me that confirmation. We're pretty close to a bullish reading. We're at a neutral level of +4. If we get +5 or above, I may start looking for setups on gold. Though I am already long silver, you can see it's got a bullish read, and we'll talk about that from a technical perspective now. So here's silver pulling back to a level of support. Same, it looks very similar to gold. The reason I like silver a little bit more is because, it's an industrial metal. If it is in demand due to stronger than expected economies around the world, it could, see a nice burst in demand, right? I've made this point many times recently on my channel, but silver is in demand from everything from cars and, the grid system and planes and trains and cars, like everything uses silver, right? So if the economy around the world, strengthens, silver will be in high demand. Same thing with things like copper, platinum, etc. And oil still remains supported. If we do double back into this area, I may actually look to potentially get long oil again, as commodities have been something I'm interested. But I'd also like to see, we have inflation data on Friday. I'd like to see some strength in the economic data prints as well to keep me interested in commodities for the longer term. And here's a look at some of the current readings on retail positioning. What we can see here is that the S&P 500 retail traders still very short on this one, so that's actually giving us a slight bullish lean. Mixed on the NASDAQ, the Russell, people are very bullish on the Russell. That actually adds confidence to my short position on it, so on and so forth. And we did get the latest round of AAII sentiment. You can use this indicator if you do have the edge finder. Very interesting stuff here. Look how bearish. We are actually officially, for the first time in the recorded history on the edge finder at least, we are more bearish than we are bullish. This is a very rare print, and perhaps could actually be a contrarian signal. Like maybe when everyone's getting overly bearish, that's the time to step in and build positions, which is what I've done personally. I'll show you some of my trades. So here's a look at the platform that I use to trade ETFs, which is WeBull. If you have not used WeBull before, it's an awesome platform. I'll leave a link down below in the description, whether you're looking to trade with WeBull or some other CFD broker. There are several free perks down below in the description if you're looking for a new brokerage to sign up with. Take advantage of those offers. You can get free shares, welcome bonuses, all sorts of stuff can be found down below in the description. It's like a garden variety down there, so check it out. So I've sold puts on XLY. This is not looking so great, but I've also sold, so you can see my P&L up in the top right. So I'm down on this position. However, SMH, I sold puts on this. This is looking great here today because I sold puts out of the money for April 26th. That will likely expire worthless, which because I've sold these puts, I'm going to make money. So P&L on that is looking okay. I may look to sell more puts on SMH, by the way, which is something I'm looking for. XLK, this one's out of the money, or I'm sorry, in the money, but because I sold that put, means I'll probably get assigned XLK. Of course, not ideal because I'm going to be in a loss when I get the shares, but it is what it is. It's part of my strategy here is to, be willing to buy the shares. At the same time, we could take a look at what else do we have? We have SMH. We also have TAN. This one's going really not great for me. SMH, I've got a covered, I've sold calls against this, which is slightly up, but then I'm down on the shares themselves. And here's another area of the market I may get assigned on today. XLC, this is the communication services ETF, which I'm actually excited about. Actually, I would get assigned tomorrow because the expiration date is the 26th of April. So if we are trading below this level by tomorrow, then I will likely get assigned these shares and be in the position, which would be fine by me. I think this is a little bit overextended to the downside here recently, and happy to own the shares if I get assigned. So I'm down on this one. Overall, options have been going, not as great recently, but I've made a lot of really profitable trades in the months leading up to this. And now with the stock market pulling back, I'm actually getting a chance to get filled on some positions that I want to build for the longer term and continue to trade options on. And here's a quick updated look in terms of my year-to-date performance. You can see this is, we're very close to having a potential red month here. If the stock market keeps selling off, some of my positions will likely turn red, but the stock market itself is very red this month. So I'm very happy with just having about a break-even month. Some of this is because I've also been trading things like silver and oil and short the Russell. So I've had some other trades that are doing well, even though the stock market itself is doing poorly. So I'm still up about 1,000. If the market continues to roll over this month, it is possible that I take my first red month this year. Outside of this has been really good. And, I'm happy with where we're at so far in the year. This is very much on target for my personal trading goals. Again, if you'd like to access this platform, WeBull is remarkable. There's a link down below in the description for people who are looking to trade stocks, options, and futures. All of that can be found there. Also, if you're looking to trade CFDs or you're looking to trade directly on TradingView, you can do so with the links down below in the description for other brokerages. Thanks very much for watching, guys. Have a great rest of your day. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.